The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Hi, folks. Basil Chapman sitting in for Tommy O'Brien. Hopefully, he's going to be back really soon. And we're looking at the Dow at this particular point. I'll go to the futures. The YM is trading up 34. Something happened. Now, I'm not sure where it was, but something happened in one of the Dow stocks. And I don't see it on the list today. I don't see any, actually. I don't see any Dow stocks on at least. Travelers, maybe. Let's just have a look at Travelers. I'm not sure it is. I'm just saying that's the Dow stock that I have that has earnings. Oh, that's it. Travelers is down 13 at 210.06. Had made a peak D in the daily chart, made a peak D in the weekly chart, and it's in a leg. Oh, a leg D in the monthly chart. Let me see. Were there any round numbers here? No, not at the high. 232.75 all-time high. Let's just move along here. Nothing that I can see. Anyway, it's down sharply. That's why the Dow, which was doing very nicely earlier on, got a zonk. All right, a zonk on the nose. Right, let's run these. We've got the YM trading up only 35 points. It was doing much better early on. I've got the Dow in a sell signal. Sell mode actually in the daily chart. I'm watching that weekly chart very closely. I don't want to go through the whole thing about the phantom peak that I have right here. No, not on the YM. The YM is at a peak D, a legitimate peak D. Let's go to the ES. This is the E-mini futures. This is the continuous contract up 18 at 51.10. Also making lower lows and lower highs. Today is the day that there should be some kind of a bounce. Looking at the IM, so we got that. Oh, let's go to the NQ, which is the NASDAQ futures, making low lows and lower highs, but a nice turnaround today, up 51 at 17,933. Now, together with the SMHs, and the SMHs have a lot of work because the 9-period moving average turned down 2 days ago. It's trading at 218.96 pre-market, down 26. I think ASML. There it is, ASML. That is ASM Holdings Semiconductors, down 47 at 929. Ho, ho, ho. There's a pattern that we've been looking at. NVIDIA has the same pattern, but it's actually holding very well. It's actually up today, 8 points. Oh, those semis are going to tell us a fantastic story come Friday's close. Let's just go on. We're going to go to the RTY. RTY is at 1988.90. It's up 6. That is the Russell 2000, right on the 200-period moving average. Very often, it'll hang around the 200-period moving. You have a bounce, and if it comes back and tests it, that's a big thing. So we're watching that very closely. Look at gold. Gold at this particular point is down just 5 points at 24.03. That's because of the geopolitical tensions. That's going to hold. There's just no question about it. In fact, I would say that the gold could digest gains and could even hold 2,300. The way things are, if there's any moment, a fractional sense, a little opening that says a little bit of peace for a couple of weeks in the Mideast, that gold contract will drop, and then it could go to 2,200. But it's in play at this particular point. Looking at silver continuous contract up 19 cents at 28.57. Also holding very well. Let's go to crude oil. Crude oil is trading right now down sharply. I say sharply because it's been moving up so well. Now it's just got that sideways to lower lows and lower highs at the moment at 84.27. Let's have a look at the bonds. So bonds, right? Bonds. Oh, they're moving up a little bit more. Up 13.30 seconds today at 114.12 seconds. This is exactly that moment where bonds need to move a little bit higher, just to say, whew, yields are not going to break out to the upside, and we'll see if that's going to happen. What am I missing here? Did that. Oh, the VIX index. The VIX index had a huge move. It went to a leg D and possibly a peak D today by pulling back 54 cents at 17.85. I think a chunk of this has been not just insurance, but a genuine feeling that the market is kind of overbought and therefore it needs some digestive action. That 200-period moving average in the VIX index at 18 point, let's call it 19, is going to be really important. We're watching this for Friday. If Friday is closed, see the VIX index closer to the 18, 90 or 19 area, that says that the market is a little bit vulnerable to further downside action. And it's been rotating down, started off the sell signal to sell mode, and finally we've got the SMHs crossing negative. I'll do that just briefly here. And then after the break, I'm not sure if we have him on. I certainly hope so, because he always has this incredible amount of information. I'm just going to check to see. Yep, positive earnings and second. Let's see. Okay, if we'll see if Kevin Hinks is coming on. I'd love to hear, because there's earnings reports and all that today. So let's just one other thing I want you to do is to just go to the futures. Look here, the futures are doing very nicely, pushing off that 9-period moving average, is holding really well. It's in a leg B in the 5-minute chart. It's only a leg A. Yes, leg A in the 10 minutes. Is this going to be a 2-click session? We're down at the bottom near the 5100, 5105 level. If you went click, you could keep it long almost all day. We'll see, because what's going to happen is that as we get into the 10 minutes, as my show's finishing, 10 minutes to 11, going into 10 minutes past 11 o'clock a.m. Eastern time this morning, that's my Tiger Technicians Hour. If the futures are still holding well, if the Dows come back to be about plus 120 in real, this is not the futures, but in real, I think we can have a very nice close to the upside. We are extremely oversold, and we'll see if it's able to hold. And we might see a rotation where the SMHs don't lead the pack. And that's the way I'm looking at it right now. So I'm kind of lost here. I'm looking at this 9 o'clock time. Usually I'm doing many other things here. But in the meantime, back at the ranch, what we are looking at is that the futures are starting to move nicely. And then we go to the Dow futures. Yeah, there's the Dow. Look at that. Peak A, B, C, D, E, F. Right at the 200-period moving average in the Dow futures. We're going to be watching this. Let's see what the NQ is doing. NQ is up 67 at 17,948. I'm going to go to look at that 200-period moving average. Isn't that incredible? It's the one technical tool that you put there. You don't have to touch it. You just look at it. When it holds support and becomes the springboard, look, peak A, B, C, D, E, boom. Peak A, and this is leg B to the upside. This could be a very nice session today. One of the reasons why we went long, one of the Dow stocks yesterday, is because I think you've got to look at everything individually. There's so many sectors that within the sector, you've got strong and very weak stocks that you've got to be choosing the strong stocks, because they are the ones that are kind of leading each of those sectors higher. So with that said, I want you to quickly look at, I don't think I did the dollar. Yes, I did. I did the dollar in the update. I'll do it again now. So DXY holding very nicely, down 13 ticks. I've got this as a leg F to the upside. Yeah, we'll see. But most important is that high that was made in the dollar index the week of the 6th of October at 107.35. How close do we get to that? Or do we not get to it? That's going to be the question for me this week. I'll be back straight off this Basil Chapter, sitting in for Tommy O'Brien. And I'll be back, and we'll see if Kevin's around. I hope so.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi folks, we're back. Basil Chapman, and this is the morning market kickoff. Remember Rocket Equities, this is what Tommy does. And we're looking at the dollar down 16 ticks. I just wanted to go through a couple of things here. So I needed to look at the currencies. EUR USD, that is the, this is the euro dollar currency pair. Made an arch formation. It's still in the arch formation. I need to do, I'll do a Fibonacci because I've been keeping it on my charts a lot longer lately, especially with the terrific work that Larry Pesavento does. Always informative, always learning them, and how many thousand charts I analyze. I always love to hear his analysis. So let's just do that with the Fibonacci. It went underneath the 236 level. Yeah. So we're watching this very closely because it is at some kind of attempt at a support, and we're looking at the USD JPY. So the euro, if it takes out 1.060, I think that's going to be a big problem. Then it could even retest the low back at that was made in October of last year. But it also a lot depends on the US dollar Japanese yen. Look, leg D in the monthly chart in the Chapman wave, leg D in the weekly chart. D is the objective in a buy mode, so it's got there. And in the daily chart, it's gone to a leg. I'm calling it a leg E. There's nothing else I can do right now. It could be an alternate counter. I don't need to do the alternate counter because everything so far is very strong. It's trading 154.57. Remember, it looks strong, but it's actually weak, even because it's going to highs, and that makes it cheaper. So for trade, etc. Okay, there it is. So it has key support between 152, I'd say 152.90 to 152.20, if there is any pullback over the next 3-4 days. All right, I wanted to do a couple other things. I'll save some of it for my show because I had some questions, but I don't think that I didn't put a note in for my subscribers today to say that I'll be doing Tommy's show. That came up suddenly. So, what's in your thoughts on 120 or 60-minute to meet Charles lead the news? Okay, so if there is a moment's respite. Okay, so the question was I believe GLD. So let's just go to the GLD. This is the, type it in the right place there. This is the gold ETF, basically. It's the Spider Gold Trust. Trades at a tenth the price of spot gold, and is trading right now at 221.22, down 35 cents. What's really important about this particular pattern, as it stalls with, it's almost like a Chapman wave inverted red Roman candle. That basically says within 2 days, today's the second day. If there is it went under under Friday's low, today's Wednesday, under Monday's low, but if it starts to trade for about, I'd say 60 minutes above 223.70, it's a 220.87. That's quite a big move. So if it trades above it'll retest the high of 225, is that 09? 225.09 that was made on the 12th of April. If it starts to fail, it needs lower highs and lower lows, and it needs decisively to close under the low of the 15th, that's yesterday, of 221.03. If it closes in the 220.20 area, let's say, then what's happened is it's starting to make lower lows, and from the high that was made 3 sessions ago, that will also imply that it's making lower lows. But it's not a big deal. Look, the 9 period is over the 14. To get that 9 period go pink, in other words, negative, you'd probably have to see 210, 210.50 to 209.50 on a closing basis. The weekly chart is, I'm calling this still a leg E. It's probably going to be a peak E if there's no new high. It's going to be a peak E if there's no new high this week. And the Spider Trust is in a monthly leg C to the upside. Chapman wave methodology, when you get a buy mode, which this is in, the 90% in the stochastics, fantastic. MACD strong. There's a really, Basil, the 15th, I knew there was a problem. Thank you very much. 15th was a holiday. Wait, 15th was Monday. Was it a holiday? No, it wasn't a holiday. It was the marathon. A holiday for many here in the Boston area. 9 a.m. show, market not open, so no daily candle yet. Oh, did we have a holiday on Monday? It's just a complete blur. I've been so busy with charts these days that I did a lot of chart work. All right, maybe it was. Whatever it is, it was 3 sessions ago, for the GLD. Now, this is going to be, to me, this is very important. You see what's happening in the No. I first have to tell you the upside, and this is fascinating. Look, using the Chapman wave methodology of automated buys and sell signals, the GLD went right to the 220.88 automated resistance level, shot above it to the 225 area, and that is still a resistance level. I have nothing in the weekly chart. I have no support levels until you get to 204. That's way down. But look at the 120-minute chart. It has right there, it has a I don't know what that is, 214.56. Yeah, we are way above that. Okay, and 223 and 224 on the resistance of the 100. So gold is kind of in this never land right now. There's nothing technically wrong about it. On a visual basis, it looks overbought. Big deal. It doesn't know it's overbought. It's doing what it's doing, and it's doing very nicely. Look at silver, SLV. This is the silver. It's the equivalent. This is the what is it called? I never remember the exact title. It's the Silver Trust. Okay, a lot of 26.59, 26.82 daily resistance levels. It got over that and it pulled back. It's trading at 26.13 right now, up 33 cents. In the weekly chart, you can go to 26.54 way back in April. That's still there. and it's gone above that, and it's actually right now just a little bit below that. And the daily, you've got a lot, 23.86, 24.97, and 25.81. It's gone above that. And then you've got this 28.04 from last year. And then in the very short term, you've got 25.29 support in SLV and 26.99. I like to look at these. I don't use them all the time, but I just like to look at them. Now, I did, because I'm doing the show here, I didn't want to be distracted. I did get out of that E-mini right there on that doji candle. I hope I get another chance, because I think there should be some kind of a pullback, maybe after the open and maybe while I'm doing the show. You're saying yesterday. Oh, okay, yes. So the 5-minute chart already looks like it wants to go to C and a D, and the 10-minute chart looks very strong. So I think there's upside action to come. Now the futures, Dow futures up 92. The E-mini futures are up 25. We'll be back straight off this, and I'm hoping that we will, a little later in the show, get Teddy Keckstad, because I want to hear what he's talking about in terms of all these different currencies. He's always doing a fabulous job analyzing. I'll be back. Basil sitting in for Tommy. The Dow futures up 87. We'll be right back.
Tigers, we have some exciting news. Live Trading Fridays are here. Join Larry Pesavento every second and fourth Friday of the month, 9 a.m. to noon Eastern Time, as he places short-term trades and gives insights into his strategies. That's right, that means the first Live Trading Fridays event starts this Friday, April 12th. Make sure to sign up so you don't miss the potential for huge gains. If you've attended Larry's stellar webinars before, you'll be familiar with the live trading portion. Live Trading Fridays will be strictly this portion. That's 3 hours of pure trading. All trade positions will be communicated clearly, and all questions will be answered in a timely fashion during these live events. When signing up, make sure to save $50 by using code LARRYLIVE at checkout. This code is valid only for this month, and the discount stays with you for as long as you're a subscriber to the service, so don't delay. Sign up, sit back, and follow Larry Pesavento as he places trades live. See you there, Tigers.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, we're back, and I'm sitting in for Tommy O'Brien. This is the Market Kickoff Show. We're looking at the Dow opening up. Okay, we can do this. I've got the GDX. So what I want to do the relationship of the GLD, that's the Gold Trust, as opposed to the GDX, and you can see the monthly chart is still struggling to break above the Chapman Wave inside track repellent. These two lines, that's like a repellent zone. You did make a peak D, a leg D in the weekly chart. We'll see if there's a peak D with no new high above the 35.60-ish level. Right now, it's at 33.45. So let me just run these quickly. And as I said at the opening, I'm expecting a little bit of a pullback. But so far, I think it should be a fairly positive day. But I have to discuss something. Oh, there it is. Okay. All right, can't complain. I actually made a mistake. I thought I clicked the exit, and I exited just a tad lower than I thought I had, because suddenly I saw I was still in the position. All right, not a big deal. So look, here's the Dow, up 109. Look at that. It's those red candles. I mean, there should be a turnaround to be able to make a leg. So far, this can be the first A that we've got. That wasn't an A right there, because it didn't do it after the trough was made. So hide line, nope, I want to get out of that. Okay, so look at this. We've got a leg A to the upside. It's gray A because it's stochastic and everything. It's very weak. I'll change it right now. Gray. All right, and you've got a peak D with a phantom peak right here. I'll go through this in my show. I don't want to go too much, but at D, other things can happen, and we've seen a sell mode in the Dow. Now, I need to do this, and I'll do it right now because this is important for my work. Look, this is the IAI. This is the broker-dealer ETF. You see how, just briefly, it was pink, but it was green. That's the 9-period moving average was very positive from about November the 6th, so ish of last year. And only once did it go pink, and then a couple of days later it went green, and it's been green ever since until just a few days ago where it went pink. That pink says to me, it's just a warning that says, watch out, because for me, this is the indicator of last resort. This is the one that's the final one that really kind of tells you whether it's confirming a turn in the market. So the daily chart of the IAI, the broker-dealer index, and I'll just go here. I'll do them at the same time. Right there. This IAI has gone at 100. Oh, let me just see something here. When do we get? Okay. I'll just ask my engineer, Al, tell me when or if Teddy is there. Ring the bell. Ring the bell. Okay, good. Now let's go back to our story here. And what I wanted to say is that within the context, this is a sell mode from the 116 round number high with then a fractional 116.16. It's down at 110.76. I think there should be a bounce attempt. But if I put it together with the SMHs, which were the last, always type in the wrong place, the last of the major sectors or indices to turn down, you can see it's up 91 cents, up 83 cents today at 220.04 the SMHs, but it did turn pink. And you can see right here that pink could flip back to green, but it's going to take a lot to go back to green. And that's just telling me that in this rotational correction that we're seeing, the Dow was first, the QQQ was the QQ was next, the IWM, finally the S&P, not finally, then the S&P turned down. Here's the S&P. I'll just go to the SPY for the moment. See, pink. And finally, you got the SMHs. So this is something to monitor really closely. They've had a spectacular move. They deserve some kind of a breather. So let's just get that out the way. Next thing I want to look at right here was, I had a question. Was that Steve posting in the den there? CLM 24 profile support is 83.41. And CLK24 profile support is 84.09. Okay, thank you very much, Steve. Folks, if you aren't a member of the den, you're really missing out on some incredible things. I mean, yes, Steve Rhodes posting, that's really nice. My impetus for the GLD question is 5323 expiry options are pointing squarely at 215 target. Couple that with UVXY that pointed to 3650 for Friday as we enter the week, now actually pointing to 35. And it appears that geopolitics are coming off the boil a bit short term. Oh, that's why your question is. So let me just go back, Dan, to this GLD right here. GLD is trading at 221.80. No, I think that it's not going to be that easy. I don't think that you can just take it off the table. I think there could be an easing. Then the market will perceive that easing. It'll pull back. But all of a sudden, there'll be this moment of tension. I think that's what we're looking at. So that's why I'm saying, you're talking about Wednesday, Thursday, Friday. You're talking about 3 days. Let me do this. Let's look at the 120-minute chart for the GLD. Here we go. And as I say, I hope Teddy's able to join us today as he does Wednesdays. So this is this is A. All you do is identify the lowest low bar, count each successively higher peak, alphabetize them sequentially, C, D, and that went to an E. Okay, so the GLD, the way I'm looking at it right now, this candle right here, if there is a pullback to 1878, that's 3 points. I'd go one step at a time. I'd go to the close of that candle, which was 228.32. So 228.32 is the first. You will not get that unless today's low is 221.05. If today or tomorrow there's a decisive break, just like a single droop, and it can't get back to 220.83, then I think you've got yourself a sudden move in the GLD. But as you go into Friday's close, because there's a weekend coming up, I think gold will actually hold quite well. Anyway, that's how I'm looking at it. It's a tough one because we're trying to play geopolitical areas. This is not, I don't see a geopolitical. It doesn't say, it just says 221.44. It doesn't say geopolitical. So all I can say is that those are the areas. Now, if you wanted to be very short term, we'll go to the, here we are. We'll go to the GLD 10-minute chart. So 1-minute chart, leg B. Oh, it's still rounding. Look at that leg B. It's stuck in a it's stuck in a rectangle in both the 5-minute and the 10-minute. That's peak A, B, C, D. And it did a nice peak A, B, C, D there. Let's just see. So I like to do rectangles and then I do a smaller rectangle. So there's another one right there. And it's green because it's on the upside. I've been wondering whether I should change that to pink because of the topping area. But yes, okay, I've got it much clearer now. If today, right now it's 9:38 in the morning Eastern time. If during my show, I'll do it again between 10 and 11, but after 11, at 11:20, if the GLD is below 221.22, then it could test the low of the day, which was 221.05, I believe. And if that's going to be the case, if it tests 221.05 today, then Thursday could be a weekday. Oh, okay, I got that out the way. Ooh, that was a cumbersome move. Dow's up 147, S&P's up 22. Basil Chapman sitting in for Tommy O'Brien, and I'll be back in a few minutes.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, He has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back. Basil Chapman sitting in for Tommy O'Brien. It is my privilege and pleasure to have Teddy Kegsat come on. He's the author of the Tiger Forex Report, the brilliant author of the report. And I'd like to say, Teddy, I think that we're real close to either breaking support levels or continuation patterns in the currencies. I'd love to hear your opinions. Hi.
Good morning, Basil. Great to see you this morning. Yeah, the currencies right now and the people who are definitely following the Tiger Forex report must be really happy with the levels that we've hit over the past day or so, and especially where we're at. And we've definitely are on a pinnacle point right now as far as whether the trend is going to accelerate or are we going to possibly get a correction. So yeah, absolutely. I can walk you through from the dollar index through a bunch of currencies, or if there's something you want to highlight first, you just let me know.
Could we start off with the dollar index, since it's already very important?
Absolutely. All right, so let me put this, I'll pull up the Dixie, I got it. All right, so yesterday we hit our upside target number 1 at around 105.93. We spiked above it, we settled above it, now we're trading below it. The way that if we were to settle right now, let's say that now it was 3:15 and the stock market closes and we were done for the day. If the markets were to settle where they're at right now, that would have us pretty much set up for at least, I would say, a short-term correction of 3 to 5 days. As far as economic numbers that we need to worry about, we really don't have much until we have tomorrow. We have the existing home sales and obviously jobless claims. If jobless claims trend lower, which obviously unemployment has been trending lower, which is something the Fed does not want to have, and existing home sales too, that's a number that probably may give a little bit of a shakeup to the market. Now, I'm not going to say which way that number is going to go. That I don't have any foresight on that. But if it does shake up the bonds in the 10-year, that would solidify a correction potentially for the U.S. dollar, meaning that if the numbers come out, we've been trending in an inflationary way. If the numbers come out at least not inflationary or helping to fuel the current trend in interest rates, which is higher yields, and we get a short-term bounce, which is very potential to happen, or at least for a few sessions, that would probably mean that we'll have a pullback in the dollar index, which means the euro, the pound, and many other currencies will have a short term. I'm not saying that they're going to trend in reverse against the dollar right now, but I think that there's a good chance we could have a bounce. And if you want me to give you some levels with certain currencies, we can totally hit it, go over those, because I'm really happy with the levels that we've hit over the past session or two.
Okay, fire away. Let's go there.
Okay. All right. So we talked about the dollar index, and you know that, like I said, is if we were to close right now for the session, I would say right now that would mean that we would indicate that we would have a pullback. So let's look at the bonds are also, like I said, a reflection of that. So we'll look at the euro US dollar, which is the major component of the dollar index. Now the dollar index, like I said, is showing that potential signal. The euro, without a doubt, if it was to close right now, where it's at right now, I think you would have follow through for the next 3 to 5 sessions.
Do you think it could hit 107?
I'm sorry?
Could it hit 107?
Absolutely, because we fell through. 107.13 was the bottom of the critical support band that we had in the Tiger Forex report. We fell through that on Friday. Now we've been trending. We traded a little bit lower. We made a lower move low over the past 2 sessions. Today we didn't make a lower move low. We are actually almost taking out the high. We're just below the high of yesterday. So yesterday, the way we only settled a little bit lower than the open, it almost like a doji bottom. And now with today, you have a bullish engulfing line forming off of yesterday's doji bottom. If we were to, like I said, once again, if we were to settle right now on the day, it would indicate that the U.S. dollar should be in retreat for at least 3 to 5 sessions, especially because with the euro making a move like today, and especially if it closes or takes out the high of yesterday, I mean, that's a key reversal shift in momentum. Now, does that mean the trend is going to change? Absolutely not. I'm not trying to call a bottom in the market. We're just made a lower move low. I'm just saying that we're looking to have a swing high up or swing up to a lower move high at the very least. Okay, so that's for the euro. Now let's get to the pound, which is another big one in the dollar index. So we have the pound, which also came into our downside correction zone yesterday. It has the same thing. It's forming a bullish engulfing line as well. If it does that, that also is another indicator. So you have your 2 key components of the dollar index that are going to give you signals. Like I said, I'm not going to say I don't know how the market's going to close. 5-6 hours from now, we could be making new lows on the day, but if we were to close right now, once again, that is confirming the same thing. It's really significant thing is the U.S. dollar CHF, which I've talked to Tommy about over the past couple of weeks, how it's been trending higher, where the other currencies like the euro and the pound have been chopping. They've been grinding lows and what have you, but they haven't been trending like as fiercely as the dollar Swiss has. The dollar Swiss capped out a couple of days ago, and on Monday it finally touched our extended upside target, and it's been plateauing, like it's really buffering up a ceiling. And now these other currencies are swinging off of these lows or highs, depending on the relationship with the dollar. And the Swiss is just going like this, sideways. So that tells me that we are definitely we have a good chance of having a correction once again for the U.S. dollar versus most currencies. Are you going to have a severe correction?
You'd be talking like a breather. In other words, just a kind of a relief from the move to regain strength. Is that really what you're saying?
Yes, absolutely.
Okay, good.
Absolutely.
Yeah, I see that as well. Okay, good.
Yeah, especially because if you look at the 30-year and the 10-year, we're coming off the lows and we're making a nice correction now set up for today. But you got to look at the pricing. We're trading at levels we haven't seen since November of last year. We're almost near the lows, which means the high in yields. I mean, people were looking for the cuts. They're not coming anytime soon.
I couldn't believe how many people were saying that, oh, no, rates are coming down. Well, it doesn't look like it. Well, it hadn't up until today. And today you've got a little bit of a pullback in the TBT. So I can see a pullback from TBT 37.33 to test maybe the 36.80s, maybe 36.50. But if it breaks under that, then maybe it'll last a little longer.
Right. And that's why, I've been talking to Tommy about how we have to look at the fundamentals that are going on right now. I mean, are we going to sustain? Is the trend sustainable with where things are going right now? Probably not. But I think what we're doing is we've already established the ceiling. We know where the floor is. Maybe. Now if the talks about raising rates actually start to come back on the table, obviously we're going to take out the lows of last year. Yields are going to go much higher, and that is very possible. If unemployment stays low, inflation keeps going up, which, oil with where it's at right now, come on now. If oil if it stays where it's at right now for the next 3 to 4 months, you can't tell me inflation's not going to be rolling the numbers.
Teddy, we got a break. I don't know if you have time. Do you have time for just one more segment before we go? And as we go
Absolutely.
into the close, I'd like to just let you clarify some of these thoughts because they're really pertinent. So we'll take a break.
Sure.
We'll be back with Teddy Kekstag in a moment. Dow is up 215. S&P is up. What is it up? 20.
And hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks, we're back. Basil Chapman sitting in for Tommy O'Brien in his market kickoff hour, and I'm on. My guest today is Teddy Kekstad, and we're looking at Teddy. I just had a question for you. One of the reasons why I want you to keep you over the break is you mentioned the 10-year, the TNX. The way I've got the TNX at this particular point, I'm looking at tremendous strength in the technicals. I don't want to go through the technicals. I use the 9 and 14 period moving average. I use the MACD, the relative strength index, the stochastic at 89%. But what do you see? I mean, in the short term and the medium term in the 10-year?
In the 10-year, actually, it's a great question. Right now, because I've been watching the spreads, especially the 2 and the 5-year notes, when it comes to the trending in yields, The long term obviously drives the trend in the long term, but the short term is what drives things in the short run. And that's where you have to, when you see the spreads, how they move. And the thing that's really I've noticed, especially between the 10-year, the 5-year, and the 2-year, is that they're leading the charge, and I think that as the 30-year continues to follow with them, that you're going to see, especially like the 10-year, lead that charge, and that's and especially with all the refinancing that needs to be done. And that's the thing that I think people don't look at when they look at yields. They look at just like, oh, there's a 30-year, there's a 10-year, there's a 5-year, there's a 2-year. They don't look at the dynamics of what those individual note structures and bond structures mean and mechanically. The reality is that when rates were much lower, our banks and our Federal Reserve financed a lot of stuff with short-term interest rates. That's a big problem. Instead of having long-term debt, no matter what, you have debt. You have a certain debt level for any company or business or definitely our government, obviously, because we have a national debt. You want to finance that at low rates. Why would you have funded our government and also the banks? Why would they fund and hedge themselves with short-term rates, especially when they knew rates were going up with the Federal Reserve that said we're raising rates? Now we've come into this conundrum. The short-term is leading that charge because they know of all the refinancing that has to be done. Where are you going to get the liquidity?
Can I just ask you, I don't want to run out of time, and I know that you've got this wealth of information. What is the level on the TNX, the 10-year, trading at 46.28 right now? What's the level that you think it'll go even lower so that yields will go higher off the top of your head?
I think you have every bit of 2 to 4 handle basis points down that you can go, depending on the economic numbers. So I would say every